Good morning, everyone. You're welcome to today's episode of the Market Snapshot. My name is Norbert Kiiza, and today is the 24th of January 2024. Let's see what's currently happening in the markets. So, as per this week, the risk-on sentiment is still very strong. We've been seeing a lot of rallying still for a number of things. We are seeing rallying on the indices. Asia also is looking fairly strong today. We got an announcement from the Chinese government that they had extended the restriction for short selling on stocks to insurers and also to hedge funds. So I'm sure most of you are aware that the Chinese indices have been performing very, very weakly. And of course, we have been seeing a lot of them reaching levels that they have not been at in over 10 years, 15 years. You can be able to see most of that when you check on the charts. So there has been a lot of discussions, especially from the Chinese government, on how they can prop up markets. I think the first announcement we got that was in line with the stock market was that they were going to restrict the short selling that was for individuals. And of course, now they extended that short selling now to insurers. And now we are seeing it moving over to hedge funds. But in addition to that, we're also seeing that the Chinese government has decided to come up with a stimulus package of about $230 billion to help to prop up the markets. This is not the first time the Chinese government has done that. And we're expecting that should we see maybe some kind of interventions in that line, then we could potentially see some rallying and some trading opportunities for a number of these assets. So when you check on a lot of the indices, like we'll see on MT5, you'll notice that a lot of them are actually trading at levels that they have not been at in a very, 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 very long time. You can see here the Shanghai Stock Exchange right now is trading at a level that we have not seen since 2008, and it dropped from all you can see from these levels here. We have not been at these levels in such a long time. Now, the other, of course, announcement that we got yesterday was from Netflix. I'm sure a lot of you are aware about Netflix, and I'm sure most of you are subscribed to Netflix. So Netflix announced yesterday that they had gotten into a deal to live stream WWE Raw. Okay, so WWE Raw is a wrestling service, live service for people to watch. You can either actually go and watch it live or you can actually watch it from TV. So the company that owns, or the holding company that owns WWE is called TKO Group Company. And TKO ideally provides streaming for WWE as well as UFC. So they own UFC. If you have seen kickboxing, so it's owned by that. Now, Netflix, of course, has been on the watch simply because a lot of people have been wondering how they can potentially subscribe to Netflix when you can actually get a friend and subscribe on their account. Personally, I have about 5 people on my Netflix, and I'm not the only one. I'm sure a lot of you either have people on your Netflix or you're ideally on some kind of like a family plan of some kind. Now, yesterday, Netflix, after hours in the US, reported earnings, and the earnings actually came out, better than expected. And of course, a lot of analysts, and of course, a lot of, most of this commentary I've been getting is, if Netflix is going to be doing live streaming for WWE, is that really going to come in and help to prop up, the earnings for the company and maybe help it to perform better? We're yet to see that. So Netflix has paid $5 billion over for a deal with TKO that's going to run for as long as 10 years. So hopefully over the period of 10 years, we see Netflix actually coming in and potentially being able to make back and even more on that 5 billion. So yesterday, the earnings that we got from Netflix, which of course Netflix stock right now is up 8%. After hours in the US. But if you look at the earnings for Netflix, that you'll notice that actually it has performed quite well. And of course, the main line that we're focusing on is the streaming paid memberships. So the streaming paid memberships, we are seeing that the estimate was 256 million, and we are seeing that the paid memberships there was that push slightly higher than the estimate at 260 billion, which came in as a good thing. But also when you come and look at the line for subscribers, okay, the subscribers line seems to be missing here, but the subscribers actually increased. Oh, Apollo, you're saying that Netflix actually allows, you're saying 5 accounts thing has been clamped here in Kenya. Actually, here in Uganda, because right now I think I have about 6 people on my Netflix, and they have actually not done anything about that. So, and no one is complaining. So, yeah, we have to see whether Netflix can calm down on that. So now there's a line that is missing here, which is the line for subscribers. So the estimate for subscribers that was that it would increase the estimate was 8.9 million subscribers, but Netflix got 13 million new subscribers, for earnings reported recently. So I think that came in as a good thing, and the stock is really performing well. So the markets have been rallying quite strongly on a lot of fronts. If you check on the indices, those of you that have been trading Dow, that NASDAQ, there's a lot of strong upside momentum for some of those assets on the back of the imminent rate hikes, okay? So looking at the current standings for the target rate probabilities, we are currently looking at, very interesting levels here. We are seeing that for the January meeting, which we have next week, currently stands at 97.4% chance of rates staying on hold, and of course a 2.6% chance of a rate cut, of a rate hike, back maybe to the target range of 5.25. So I'm not expecting that to happen, but of course the markets are anticipating that, of course, the rates will stay on hold. I don't expect us to get a rate hike in January. I'm expecting maybe the first rate cut could possibly come maybe in June. And of course, there has been a lot of anticipation that it comes in May. But as you can see, rather in March, last year, March 2024, looked almost like we are going to expect maybe at least one bump for hikes, but you can see that actually we're expecting that there's going to be the first cut. There's a 50.7% chance that the target range, the rate is cut back from 5.5 to 5.25. So historically, usually what has happened is whenever the Fed starts cutting rates, we'll normally find that the indices tend to perform fairly weakly, but we're yet to see how that pans out. So looking at our economic calendar, we don't have that much of data today. I think the main event which we have today is the Bank of Canada interest rate decision. And of course, the Bank of Canada, there may not be that much of a surprise on the trading because they actually have been keeping their rates on hold for quite some time. December was the third consecutive meeting that Bank of Canada actually kept rates at 5%. So of course, I'm thinking most central bankers, we should see them starting to revise their policy, and we could potentially see, some bit of cutting hopefully coming in soon. Now, that's what we can expect to see for Bank of Canada. Now, we also have on our calendar crude oil inventories, which are going to be released sometime later in the day. That's at 6:30. And of course, oil prices have been quite choppy, stuck in a bit of a range. There hasn't been that much of reaction for the oil prices. And I'm expecting that should we get maybe some bit of a cut back there, then we could potentially see oil, potentially selling. Now, on the charts, of course, like we'll see, oil has been ranging above $67 a barrel. That is on US crude. And I'm expecting that should potentially continue. So quickly, before we go to the charts, I want to cross over to the fear index. So the fear index, VIX, is an implied volatility tracker to see how the volatility for the S&P stocks are doing over a period of 30 days. So of course, I know the implied volatility possibly over the past 30 days has not been that much, and that's why potentially why the VIX is trading at these levels. Now, if you look at the fear index here, you notice that we are trading at levels that we did not see since before the pandemic. Right now, the fear index is at levels we are seeing here, which is almost 12.65, okay? So the market seemed to be indicating to us that there is not that much of sort of like a fear in the market, okay? There isn't that much fear, and I believe we are yet to get the big catalyst for this year. I think one of them is, which of course is one that we crossed over from last year, was their geopolitical tensions that came in from the Houthi rebels. So you notice that US and actually UK are currently now fighting the Houthi rebels. So a lot of ships have had to, divert their movement. If you check on how the ships are moving right now, most of them are now moving. They now have to, they don't go through Suez Canal. They now have to go to South Africa, move around it, and then now go to especially to areas of Europe. Most of the ships that are moving to Netherlands, to the ones that are moving to the US, they are all having to cross, around South Africa, therefore delaying that time. But I think there isn't that much of a reaction. And until we get the new catalyst for this year, I do not think there's going to be a move higher. Now, the other thing also there where there's a disconnect is when you look at the US 10-year, the US 10-year right now, okay, is trading differently from how it was trading last year. So last year, when the US 10-year bond yield was trading at this level of 4.1%, we saw that actually there was a bearish pushback on the indices. But that seems like the indices have now normalized these levels, and even when the US 10-year is also trading at these elevated levels. So in this year, we could potentially see that we shall now possibly, especially if you're trading the indices, you might want to find something else to trade them against when you're tracking either bearishness or bullishness. Because if you tend to see bullish US 10-year like we're having now, okay, then it could just give us some kind of indication that there's some kind of disconnect, okay? Yeah, so we're in a fully blown bull market since now Dow Jones, DAX, and now NASDAQ have crossed above their levels that they last saw in 2021. That means that we are now in a bull market. So I think without wasting time, we can just quickly look through the earnings calendar for today. So today after hours, for those of you that are trading NASDAQ, we're expecting earnings to be released for Tesla. Tesla, of course, has been under a lot of scrutiny simply because of things such as cutting the prices for its cars. We are seeing that it has been cutting prices for its cars in a lot of regions so that it can prop up profitability. But in addition to that, the car deliveries for Tesla also missed estimates recently, and that indicates that there could be some potential slowdown for Tesla. So we're yet to see what Elon Musk is going to do to help to prop up the value for Tesla. We also have IBM reporting earnings today. So a number of companies reporting earnings are potentially providing some kind of upside momentum for these indices. Okay, so let's cross over to the charts, guys, and see what we currently have there. So looking at the charts, we have to keep an eye on the China 50, which is the index. As you can see, we have a very nice descending wedge right now, formed very nicely on the China 50. And as of this morning, the Asia trade and of course the Europe trade, we are seeing that the Hong Kong, the Hang Seng index is actually up about 1.87%. And we're also seeing that the China 50 index is also up about 2%, okay? And of course, that is on the back of the announcement from the Chinese government that they have they have restricted hedge funds from short selling. So we are going to see potentially a nice move higher for this particular index. I'm expecting that if we manage to break above this descending wedge here on the weekly, then we can expect it to move higher and potentially go back to these levels that it was at sometime last year and possibly even higher. Now, crossing over to NASDAQ, NASDAQ seems primed to be forming it seems to be forming possibility, an area of where it's going to have a descent. And I'm expecting that if we do not manage to crack that upper line there on this ascending wedge today, then we could potentially see a nice pullback for the index that's going to take it at least back to this level here. We are not yet in a fully formed downtrend for NASDAQ. And of course, like I showed you last week, NASDAQ paid its debt on a higher time frame, where we saw it having this sale that it had that was sometime at the start of the year. So the fair value gap, of course, was filled partially for NASDAQ, and I think it is Dow that still has a big fair value gap on a higher time frame. So I'm expecting that NASDAQ should stay fairly elevated on the back of strong earnings. Crossing over to the Dow Jones, when you go to the Dow Jones and you look at the 1 hour time frame, this is where we currently stand, okay? I'm expecting that we should see a nice pullback for the Dow Jones, especially if we do not manage to take out this high that we had on Monday. So you notice that every single time Dow Jones has gotten to this level around here, it has immediately sold back from it. And that should not come as a surprise, simply because these levels that it's at are actually elevated levels. When you go on the H4 time frame, you can see that we had a nice break above this month-long range deadlock. And of course, the moment we broke above it, we still stayed fairly bullish. But should we see price action breaking potentially below, especially this level here, then we can expect that there's going to be a nice pullback for the Dow Jones that should potentially take it back into this zone. Now, seasonality is important if you're trading indices, simply because between end of January and usually towards the end of Feb, there's usually a pullback on the indices, and their pullback normally lasts up to March, and usually towards the end of March, and then of course into April, there's normally a rally. So keep in mind that much as we are trading fairly higher, we need to expect that there will be a pullback at one particular point. So crossing over to GBP/USD, GBP/USD is fairly bullish. I'm expecting that we should have a nice break above this level here. And of course, we have a nice ascending triangle there, providing us some bit of bullish momentum. Now, keep in mind also that the structure for GBP/USD has changed. We were first in a sort of like a downtrend that now ended between September to October. And at the end of October, we started moving on the uptrend. So right now we're in a very strong uptrend, and I'm expecting within the course of today, we should see GBP/USD progressing fairly higher to test higher levels, at least above 1.27. Let's cross over to Euro/USD. So for Euro/USD, right now on the H4 time frame, we have a very, very nice descending wedge also forming here. And I'm expecting that, especially since we have the ECB conference taking place, tomorrow. Tomorrow, I'm sure you're going to be with Rufus, and he's going to take you through the expected directions there for after the ECB. Now, of course, if we get indications, right now the baseline for ECB is that they are still fairly hawkish, and they're not expecting rate cuts. And should we get the same narrative as we had the last meeting, then we should see it potentially breaking higher and testing much higher levels. So I'm thinking possibly back to where we were in December is very likely over the course of today and tomorrow. So let's cross over to GBP/JPY. So GBP/JPY, Yesterday, it disappointed traders who are trying to trade the BOJ, such as myself, and simply because we did not get a nice pushback higher, despite the same commentary that we got from the last meeting. So should we fail to manage to break above that area there, I'm expecting that we should see a much deeper decline on GBP/JPY, potentially below this level here. Now, if you go on higher time frames for GBP/JPY, you'll notice that psychological level for it stands around possibly around 190 upwards to 195. That area there, of course, is an area that we have not seen since 2015. Okay, so it also explains why the reaction that we had yesterday was not that much of a surprise. You can see that we had the double top that formed during the meeting, which of course were good opportunities for us to short it. So I'm expecting that should we fail to break there, then we can short it all the way, possibly back to this level here where we had a nice gap forming on the 17th of January. So let's quickly look at gold. Now, gold is still on a downtrend. If you look at it from the H1 time frame, and of course, even from the daily, this is what we are having on gold, okay? Seasonality also usually tells that gold normally has a pullback between now and usually towards the end of end of February. So we should see a nice pushback there for gold, possibly taking it much, much lower. And we have to just keep observing to see how it trends. But for now, I'm expecting that we should see at least a nice move higher. So I think that is pretty much it for the charts. I'm looking at Netflix. Netflix right now is going to open. It's going to open at 519, 518, which is somewhere around here. Okay. When the US market opens, Netflix is actually opening up higher. Now I'm expecting that Netflix over the course of this year, we should see it trading much, much higher. And it might attempt at least to get back to the level that it was at sometime in, this was in 2021. So this is a nice swing trade opportunity for Netflix. You can always trade it. I think the minimum margin for trading Netflix is roughly around $5 if you're using a 0.1 lot. And that I think should give you an opportunity for you to, look at some of these stocks. So that's it, guys, for the snapshot. Let me quickly look at your questions. Hi, Gitao, how are you doing? Hi, Evans, I hope you're doing awesome. Hi, Joseph. Apollo, yes, I think I handled that about the accounts, yeah, which Netflix has to deal with. Okay, Nixon, hi, how are you doing? Hi, Jude. Yeah, Apollo is saying the fair index fall. Who is driving it? Methinks BFIs and hedge funds are not participating or providing liquidity, earning so spectacular to support the high prices. Of course, the VIX might not be suppressed simply because that it's based on implied volatility for the past 30 days. So if we have not been seeing volatility that much for the S&P stocks, then of course that usually will imply that we'll see a weaker VIX. But of course, there are a lot of things that the VIX does not take into account, like the current geopolitical tensions that are actually boiling up in the Middle East. But also, we're also seeing that there's a lot of build-up of shipping delays, which of course may not have that much of an impact right now on inflation. But if it spreads into the year, especially the conflict between the US and the UK, then we should see some bit of reaction from there. But for now, I'm thinking we might want to get another sentiment indicator to gauge fear and maybe move away from the VIX. Yeah, so hi Jessica, how are you doing? Euro JPY, I think same thing also with GBP JPY. It seems to have halted its upside move. Remember that it has been buying from the start of the year, so I'm expecting that the same we should see at least a nice pushback there for that particular currency pair. US crude oil inventory dropped by 6.674 barrels last week. How do you interpret this? Yeah, I'm thinking that there might not be that much of a feed through in price. And of course, you know that sometimes supply and demand dynamics play in price. So at least one level that I know is a psychological level for US oil is $67 a barrel. So it's been playing around that level there. And every single time crude oil sells to that point, it usually buys up. So I'm expecting that you should have your buy limits somewhere around there, possibly to the upside. Are you dollar bullish or dollar bearish? Right now, of course, dollar is stuck in a bit of a range. It is still holding on to its gains that it made on last week from the 15th. So we should see at least a nice hold there for the dollar. But I'm expecting that given the fact that we have fairly strong US 10-year yields, that of course should help the dollar potentially to move higher. And we should see at least, especially since the cuts are not yet so soon, traders are going to hold short-term to medium-term dollar buys. Yeah, awesome. So I think that's it, guys. I wish you all an amazing trading day, and I'll see you guys next time for the snapshot. Cheers and have an amazing trading day. Cheers, guys.